is fine. Testing 1 2 3. Testing 1 2 3. Okay, working is fine. Okay, I think we can begin the webinar already. Alright, hey guys, welcome back to another IC Markets webinar session, and today we will be going through a pretty simple session, which is preparing for the 2025 year. Alright, so before I begin the webinar, everything in this webinar is educational in nature and nothing should be construed as investment or trading advice. Alright, so please do your own due diligence before you guys trade. Okay, so for the agenda, we will be going through the key drivers of the FX market in 2025 and also what are some currencies that you can watch in order for you to be profitable in 2025. Alright, then we will post some market risks and challenges in the current markets of forecasted challenges that might cause you to face some obstacles. Alright, and the fourth part is the strategies for success. I'll share with you guys a simple strategy that you can use which is effective enough for you to be consistent and for you to backtest at your own time, and also some tools and resources that you can use to help with your trading setup. Alright, then the last part we will be going through some pairs, right? So basically a very simple live analysis session on what are some pairs that you can look for, which is similar to the second part, which is the currencies to watch. Alright, so yes, if there are any questions along the way, please feel free to type in the live chat. Alright, so that I'll be able to guide you guys on what you can do in order for you to have a better year in 2025. Alright, so I'm your host for today. My name is Woon Hong, and I'll be going through today's webinar with you guys. Alright, so just bear with me for a bit. It might be a bit wordy, but I'll try to explain it as simply as I can. Alright, so for the key drivers of the FX market in 2025, so the first thing, of course, we have central bank policies. So central bank policies such as your interest rate decisions and monetary policy meetings where they will discuss whether to cut interest rates, to maintain interest rates, or to increase interest rates. Alright, so these are led by your Fed, and I'm sure you guys know about the famous man called Fed Powell. Alright, then we have ECB, we have BOE and BOJ, right? These are some examples that might cause the markets to move quite a bit. Alright, then we have easing and tightening of such policies. Alright, and then the second thing is we have geopolitical tensions. So some of you guys may know that we have trade disputes such as US and China relations. Alright, so if this could generally affect the price of the US dollar. Alright, and if during those times where we have geopolitical tensions, do you realize that gold will usually have a spike upwards, right? Because if let's say DXY goes down, DXY, which is the US dollar index, goes down, right, gold will most of the time go up. Alright, then we also have regional conflicts and alliances, etc. Alright, but of course just focus on this part, right? And if we also have something like war or anything related to tensions in the world, right, pairs will be very volatile, especially gold. Alright, then the third thing is technological advancements. So as we all know, AI is rapidly improving, right? Then we also have different trading platforms having machine learning or to help you with your trading. All right. Then we also have automation of trading strategies and also gathering of data. All right. So I would like to say some things about this automation of trading strategies, right? Because I used to think that, right, if you are able to automate your trading strategy and then put aside the psychological part of trading altogether, right? So um, just counting on the board itself to help you trade, right? But there are a lot of times where I've actually tried and tested this on myself, right? I've coded a bot and tested it in the live markets with about 500 USD on multiple accounts to test out different settings, right? To gather enough data, right? Tested it for a couple of months, right? Some settings are profitable, but some settings are not, right? So all in all, it was like almost a break even, right? I think I profited about 4%, right? After trying out different settings, experimenting, found the profitable settings. But if you ask yourself, right, would you rather that, or would you rather have try to be consistent, right? Trade one strategy all the time, right? And then you're able to control uh, where you can buy and sell yourself, right? Because a lot of things that the human mind can do, but the bot cannot do, right? For example, there are some point in time where you think that, okay, we are at a certain level, right? But we don't have a change in character yet, sort of thing, right? Price shouldn't, based on experience, price shouldn't go up from here. It will most probably go down, right? But the bot will just follow a set of rules and trade based off it, right? You won't have that kind of experience and psychological factor that we have, right? So I would say try to stay away from bots, right? Unless you are very confident and you are maybe you have experience in quantitative trading, right? Then you can explore bot trading, right? There are a lot of bots in the markets, right? In the MT5 market or even MT4 market, right? If you guys realize, right? But not a lot of these bots are profitable in the long run, right? You want to be profitable in the long run yourself, right? And then you can have that kind of confidence that you never ever had. All right. So the fourth thing is crypto influence, right? After the elections, right, we saw the growth of cryptocurrencies, and we also saw the collaboration between Trump and Elon Musk, right, creating a digital currency, sort of central bank, something like that, right? Which caused the rise of BTC USD to fly above 102,000 already, I think, right? Recently we just had a rise again. Okay, then yeah, so if possible, maybe you might want to explore the cryptocurrency space, right? But try to avoid trading meme coins or altcoins, right? Try to learn how to trade um ETH USD, BTC USD, or Sol, right? All these are more stable, right? They won't have that dump, right? Or lose your money overnight, that kind of thing, right? So try to diversify your digital assets for spot trading like FX, commodities, BTC USD, right, sort of thing. Okay, then the fifth part is economic indicators, right? You can look at GDP, employment data, and inflation reports from Forex Factory. Later on, after a couple of slides, I'll show you guys the step-by-step basis on how I look at the markets on a weekly basis. All right. Then lastly, we have how it actually impacts the impact on central bank decisions, and also the confidence that the investors have. Okay, so the next part, all right, just a few more slides of words, and then we will hit to the charts. All right, so some currencies to watch, right? So if you guys have tuned into the live trading session that usually I conduct, right, I would usually focus on major pairs such as euro dollar, GBP USD, uh, and GBP JPY, right? These three, euro dollar, and pound yen, right? These are the pairs that I trade on a weekly basis, right? And then I'll include gold and also sometimes BTC USD, right? These two pairs, right, because they move almost the same as each other, and if you realize, um, if you trade these two pairs well, you can just pick one, right? If you trade these two pairs well, you can generally be very profitable in the long run, right? You can choose to focus on one pair, right? I know of a few people that actually focus on euro dollar only, right? Or these two, just these two pairs, right? But as practice, I would suggest to practice on 1, 2, 3, and 4. And then minor pairs, GBP JPY is optional one, right? This is more volatile, right? I love GBP JPY because it's more volatile. And then BTC USD is for those who are interested in trading crypto. All right, so these are the ones that I usually trade. And then of course we also have gold, which is XAU USD. Okay, so but for those who have just started and those who have more experience, right? More experience, you can definitely trade gold. But for if you are just starting out, right? You are a bit lost. You don't really know how you can start trading, right? Just focus on these two pairs, right? Or even these three pairs. These first three pairs are the ones that are relatively simple, right? And they respect the traditional levels like your horizontal levels on supply and demand, and then also FIBO levels, right? Okay, so yeah, just to point out some things. Okay, so the last part of words. Okay, so just bear with me for a bit. So what are some market risks and challenges that you might face, or the market might face along the way, right? We definitely have tensions in the world, right? Previously we mentioned about the trade wars, which is US-China conflicts or tariffs under Trump's the new president's administration. All right, then we also have not so much of a impact, but regional conflicts, right? So try to focus on bigger news where there are trade wars, etc., right? And this will affect the markets quite a bit. You'll see the market is becoming very volatile, right? We have higher spreads and etc., right? So yeah, try to read through IC markets. We have the fundamental analysis articles, right? If you have the time, right? It's a daily basis. You can read through the articles or even do your own research on what are some news that might cause that might cause the markets to be very volatile, and then you focus on those news. All right. Then some websites that you might use quite a bit would be Forex Factory, right? Investing.com, and then of course we have in-house fundamental analysts in IC markets, right? So yeah, definitely you will have to look through, and then you will get to understand a lot about this fundamental stuff, right? Okay, so the next thing is economic policy uncertainty, right? We have unpredictable changes in government spending, etc. Then this is not very important, right? Usually I just look at Forex Factory and then look at what are some changes in the policies, what are some um, changes in the markets, right? Which might cause the markets to have a drastic change, right? Usually news such as policy changes like monetary policy, right? We will always see very huge engulfing candles either to the upside or to the downside, right? Then yeah, those are some news that you might want to watch out for. Okay, then of course, lastly, we have the very important ones, which are interest rate changes, which cause fluctuations and also shifts in GDP, employment, or even inflation, right? Leading to very sudden price movements. Okay, so when you have such interest rate changes, like they say, the Fed say they want to cut interest rates, right? Cut interest rates means that DXY would generally go down, and this will cause pairs such as euro dollar, pound dollar to go up because they have a inverse relationship with DXY. Okay, so apart from that, apart from that, let me just go to the, give me a sec. Okay, let me just go to this. Okay, we are in the DXY chart. Okay, so what are some things that you might want to look out for? Okay, so when you are looking at when you are looking at DXY itself, right? Okay, then you can see previously we had a forecast that DXY could probably have a pivot downwards here, and it's right. So let's remove this. Oh yes, wait, Forex Factory. Okay, so let me just go through Forex Factory just a little bit to go through this. Okay, so the first step, what you want to do is you just go to Forex Factory, you will mark out the high impact news, okay, apply filter, alright, and then look at all these news over here. So through experience, you'll know that, okay, CPI definitely, these two will not affect the markets that much, right? CPI, of course. Then, oh yes, this is the this is right before the official NFP news, right? Then we have unemployment claims. Okay, these are very important. Okay, FOMC meeting minutes, of course, and then we have NFP this coming Friday. Okay, so this, when you see all this unemployment rate, NFP, etc., right, this will affect the markets quite a bit. All right, so once you are there, and yeah, we should be done for the week. So you will go back there, you go back to your charts, you take note USD, AUD, and CAD. Okay, then what you will do is you will note down. So USD CAD, what are some levels that USD CAD might potentially bounce off from, right? So I'll recommend trading about 15 to 30 minutes after the news, right, to catch some volume. Okay, so yeah, H4. Okay, this has already been tapped. Okay, so we cannot use this anymore. Okay, so let me just create a copy. Okay. Oh, wait one sec. Let me just create a copy. Okay. Okay. Okay, let me create a copy. Okay, so first let's look at DXY. Okay, let me just remove everything. Okay, to show you guys how we usually do it. Okay, so the first thing that we should do is mark out your support and resistance levels. Okay, so when you look at this area, right, current price, yeah, this is fine. This is daily. Yeah, this should be daily. Okay, 50%. Wait, let's adjust this a little bit. Okay, this is fine. Okay, so we might have a bounce. Okay, let's not use this anymore. We will place this as our first, and this will be our second. This will be a second. Okay, this is fine. Let's see. Okay, this 38.2. 38. Okay, this is fine. Okay, first support. Okay, so we are aiming for DXY to come down to this first support, and then we will have a bounce upwards. Okay, this is what we are projecting. Okay, ideally this is what we want. Okay, so if we are projecting, okay, so DXY, we are looking for it to fall, right, before we look at, if DXY goes up, means other pairs might have a sell, right? So let's check. So let's start with euro dollar. Okay. Oh yes, so speaking of yeah, let's go through some pairs. Okay, so you'll mark out this. All right, we'll go through a very simple strategy that I can share with you guys. All right, so yeah, if DXY is, we are looking for a bounce, let's check the other pairs. So we start with euro dollar. Okay, we clear this. Okay, start by drawing out your horizontal levels. Okay, so price is here right now, right? So you mark out your horizontal levels. Okay, where is a very common area that price has tapped before? So it's probably here, right? Because we have one breakthrough, acted as a resistance. Okay, acted as a resistance again. Okay, then what's next? Might act as a resistance, but might also break past, right? Because usually from experience, once price tap it like at least three times, right, it will most probably just break through. Okay, so let's see. Okay, first resistance. All right, then where is our support? Support don't look very nice, but I think this is a valid area. Okay, support is over here. You most probably don't really have to mark out the second support because it's pretty far, but sure, let's do it. Okay, then where is your next resistance level? Is probably around here, right? This is your second resistance level. Okay, we are on the H4 chart, so anything within these levels don't touch at all. Okay, so only touch when you are only trade, right, when price is near your level. All right, very near, or let's see how it reacts, right? Okay, so let's see. Okay, let's see. This missed already. Bounce off. I think it bounced off very nicely on the 38%, I think. Is it 23? Yeah, close. Okay, this don't look very nice. Just okay. Let's see. Price bounce off from here. Could react from here. Let's see daily. Okay. Oh, we have a high. Let's look at the bigger fib. Okay, 50% reacting to the 50%. 50 and 38. 78. Okay. If I draw the fib from the daily from this high to this low, right, you can see price is now at the 50% fib over here, right? That's why we are showing some sort of reaction around here, and now it's definitely not during the session, right? That's why we don't see any volatility. Oh yeah. Okay, so what we can do is to wait for New York session. Yes, so one tip, right, is to wait for trading sessions, right, before you enter a trade, right? Any pair, always wait for trading sessions, except for crypto, because we are quite, even on weekends you can trade crypto, so that is an exception, but for pairs such as gold, GBP USD, etc., right, those with USD, right, we should wait for trading sessions. Okay, so this is what I could probably see, right? If I were to draw, yeah, this could be a level that you might want to see. Okay, let's go to the max I'll go to is 15 minutes. Okay, if price is around this level, okay, so let's start off. So we have marked out our horizontal levels, we have marked out our fib, right? So this level is fine for a sell. Let's see, right? But what we need is, once we are in our this thing called, once you mark out your horizontal levels, okay, this is a very simple strategy. Okay, horizontal levels, then we move on to fib. If it aligns with the, oops, okay, and the next thing is go to 15 minutes. And then enter on PG. Okay, very simple stuff. Okay, just now we went through horizontal levels, and then you draw the fib, see if it aligns. If it aligns, that's good, right? Those are in H4 or daily. All right, then you go to 50 minute. You see price has already reacted to this level. That's good. All right, so what I mean by go to 50 minute to look for entries, right? So you go to 50 minute, and then what you are looking at is you can see price is still going up, right? We need a market structure shift, meaning that we need a strong move downwards, right? And then once price comes back up to this level, okay, once price comes back up to this level, we want to enter on the where is my square? Okay, we want to enter on the FVG right here. Okay, box, we want to enter on the FVG here, or in this case, right, we are looking to sell, we will enter on the supply area here. Okay, so let's see what we want. Oh yes, and a lot of people have this misconception that when you have, so ideally what you are looking for is you are looking for price to break this level, right? But they assume that, okay, if price weak this level out, do you still count this as a break, right? For me, no. What I'm looking for is I want price to close below, all right, close below, and then best is if we don't have a top wick. If we have a top wick, right, this means that price might go up. Okay, sorry, we need a top wick right here to create a FVG. Okay, then price will usually come in, fill that gap, and then come down. So if you understand price action and you see this long enough, you realize that, okay, there are a lot of times where price go down, we have a market structure shift, right? Test this level and then disrespect it, right? So if this doesn't work, right, you should, what we are looking for is this, and then we have a close, and then enter on the FVG, right? Okay, and then you target. Usually price will work out, but sometimes when some traders are greedy, they might target too much, right? Usually you target the next low, right, where you feel that there might be obstacles right here. Okay, so let me go through this again, right? We see a nice structure upwards. Okay, price is starting to definitely slow down, right? Because we are not in session. Let's see, right? Once we have a break over here, okay, enter off this fair value gap, then you target this area. And then for trade management, how should you put your trade management? Just enter on the right here, short. Stop loss placed above this high, about 16 pips, right? The TP is about 41 pips, which is about 2.5 risk to reward ratio, right? Some people, they like to do this thing, right? Enter around the FEG right here, then try to snipe. So they'll put one position here and one position here, right? But in my opinion, right, why not just put one position, okay, and just let your mind take a rest, right? AUS, oh, that is interesting. AUS 200, oh sure, okay, yeah. So this is something that you might want to take a screenshot, right? This is a very simple strategy that I used last time, right? But now I changed my strategy a little bit. So yeah, this is very effective, definitely works. So you just have to use this as your base, all right, and then see how you want to tweak this strategy, right? This strategy is actually very good to use as a base, all right, and then you can add whatever confluences that you might want, but try not to make it too complicated. Okay, so let's see, what is this? AUS, okay, AUS 200. Oh, that's interesting. IC markets AUS 200. Okay, let's see. You know, I've never seen this pair at all, right? I know some people might trade in this. These are indices, right? So, oh, actually, it's pretty nice, huh? Okay, let's go to H4 first. Okay, it's very simple things. Remember just now, we have, let's just copy this, right? Oh my god, my goodness, sorry. AUS 200. I see markets. Okay, then we paste this. Okay, follow this. Okay, horizontal level first. Okay, horizontal level first. So let's see, this is a very nice, actually this is a super nice level for resistance. Okay, and then our next level is probably okay, let's take this high. Let's take this high. What's the difference? I have no idea what's the difference between. Is this 76 pips? Or is this 737 pips? Sorry, form, right? Is this 73 pips or 737 pips? I'm not really sure how to calculate AUS 200. I've never seen this. I've never traded this pair before. From here to here, I think it follows US 30, right? Yeah. Let me see. Let me go and take a look at it, but yeah, okay. Then we will see. Oh, this should be quite fun. Okay, wait, let me see. Oh, ideally I was looking for it to come down though. Okay, wait, let's see our support levels. Okay, why not let's make it more actionable. Let's look at how price might react. Okay, so let's do this. Okay, first resistance. Okay, this H1 by the way, so let's see. Then we have this second resistance. Okay, then we have, yeah, okay, yeah, makes sense. Thank you. Okay, then we have support level over here. This pair is a little bit tough. Sorry, the chat. Oh yeah, no worries. Oh, this is nice. This is nice. This is a nice level. Okay, this is H1. Okay, so ideally, right, if I were to use extension, let's see. I think, right, 78. Yeah, 78 looks way better. H1. Yeah, let's try this. Let's try this. Okay, so we might have an entry for AUS 200, right, at 8321, and then stop loss 8354, right? You can put it slightly above, maybe 40 pips. Okay, let's see. If we have at least 1:1.5, we can enter. Okay, okay, this is decent. All right, this is decent. I think it's okay. I realize that usually once we reach a point of resistance with, if I were to use pass, I don't really trade this, right? So if I were to use, yeah, if I, this pair tend to react quite a bit to extension levels and resistance levels together. So there might be a possibility if I were to draw the extension level and then mark out the resistance level, possible that price might actually show rejection from here and then, you know, enter from here. Okay, so yeah, but H4 H4 don't look too good. H4 just looks like is gonna break past, and then we are looking for sell around here. Okay, so yeah, from since we're on H1, right, then yeah, usually yeah, we can go to 15 minutes after that. Okay, then same thing, you are looking for, once price reach this area, okay, let's see, right, once price reach this area, what we are looking at, right, is for price to not close above this height, right? If price close above this height, if the H1 cannot close above this height, I would say don't enter the trade. Okay, if it shows rejection here and then the next candle open is below, right? So what I mean by this is we want to see something like this. Okay, this is a candle, then we show rejection, then the next candle open is below. Okay, this is fine, we can start to enter on the 15-minute time frame, right? But if price does something like this, right, okay, just right, if price starts to close above, then just ignore this trade. Okay, there is a way better H4 level, which is this level here. There's a way better H4 level for sells here. Okay, just that the issue with this is that we don't really have an extension level, right? And I realized that this pair loves to react to extension levels, right? So let's see if I were to draw from this high. Yeah, yeah, don't really align. So the only option I can look at is probably here or here. Okay, actually this is a really quite interesting pair. I've never really trade. Yeah, but of course 15 minutes is very bullish. All right. Yeah. This could have been such a nice entry. Yeah, this would have been a nice entry, right? Reacted to this level, and then we have, you see, reacted to this support level. Okay, market structure shift. We have the break here. Okay, we have the break here, and then price reacted to this FVG over here. Right? This is, oh no, sorry, this is not. Let's see, let's look at other trades. Yeah, this is not a FVG, sorry. Yeah, but what a nice reaction here. And then just flies from there. Okay, Okay, let's, yeah, so I hope, yeah, it's a fun pair. I realize that it's quite interesting. But are the spreads high? I've never really, because for US 30, right, some spreads are high, but if, oh, I'm 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 proud of you. That's that's a very nice entry, right? The break and retest, very simple stuff. The consolidation, right? We have a very strong push upwards. You see this bullish engulfing candle? Just enter off the break and the retest. Very simple stuff. Once you master, yes, once you master engulfing candles, honestly, you can add that to the trading strategy, right? You can enter off once you see engulfing candle, come back and test this level, right? Very nice break and retest. And then for myself, usually I never ever go below 15 minutes ever again, right? Because there's just too much noise right here, right? There's too much noise. I don't really like. I rather just have a peace of mind, enter off the 15-minute structure, right? Stop loss at this level, just target the highs over here, right? Yeah, not sure if you guys agree with me, but yes, the max that I would probably go is 15 minutes. Yeah. Okay. Oh yes, before I forget, let's go through gold. Okay, let's go through gold for a bit. Uh, yeah, I realized this trade would have took out a lot of people's stop loss. Yeah, but based off the strat which I use, right? This trade, oh, SNR is support and resistance levels. Sorry for the little bit of short form. Yeah, SNR is just support and resistance. You can also use supply and demand, it's fine, right? Whichever works for you. Okay, but to keep it simple, usually I just like to use support and resistance levels. Yeah, abbreviation, yeah. Okay, so this level right here, right? The moment, okay, so we stick to okay, wait, let me paste this again. Okay, let me paste this again. Okay, SNR levels. Okay, start off again. Okay, where are some, okay, this is a minor resistance level, right? Because we see this huge rejection wick. Okay, let's put this as intermediate resistance first. Resistance dotted. Okay, dotted means intermediate. Intermediate resistance is a chance that it might break past. Okay, so that's why I put that as intermediate. Okay, then this is another level, so this is our first resistance. Okay, then we have first support right here. Okay, then the next thing is we have, okay, fine, let's take this week. Okay, because here to here is 200. Yeah, let's take this week, is fine. Second support. Okay, then once you're here, first resistance, second resistance is probably here. Okay, second resistance is around here. Okay, second resistance is fine, this is fine. Okay, next thing, Fibo. Let's see any fib levels. So we will start off with fib levels here. From this high to this low, what can we see? Can we find any fib? So I'll just put all fibs, right? And then let's see, this level should be 61, but 61 has already been tapped. Okay, so we have a 61% level right here, but you see, price has really tapped this level and showed rejection. Okay, so usually I wouldn't use this fib level anymore. Okay, so usually I won't use this fib level anymore. Alright, and most probably this level will get taken out to do something like make a higher high. Okay, then higher low, higher high, something like that, right? Okay, let's see. So what's next? Fib we don't have. Okay, so what are we looking at? We are looking to see if price, yep. Okay, usually this kind of market structure, right? Then we have consolidation about now. Usually it will just break. So how should you enter based off this? Okay, so if price is consolidating in this area, okay, what we are looking at is very simple stuff again. Very simple stuff again. Okay, we are break test, okay, and enter off, same thing, enter off here. Okay, so this is what we are looking for. We are waiting for price to break past, okay, enter off, same thing. Let me see. Oh, where is my, yeah, we will need market structure shift, okay, but in this case we are towards the upside, so we will just continue with break of structure, and then we will enter on FVG or the last downward movement. Okay, so yeah, this is what we are looking at. We are waiting for price to break past this high, then we will enter. Yeah, so ideally, let me just mark it up for you guys. Ideally, we are waiting for price to do something like this, break past this high, okay, then we will have something like this, then we will have, generally you have a FVG for you to enter from. Okay, that is on 50-minute, because if you look at this, right, very simple stuff. Once we have consolidation here and we have very nice market structure, okay, we have very nice market structure, you have consolidation in this area, right, and especially during this period where they are having lunch or something, right, they're probably having lunch. Usually this period we like to make a small joke, is that they're having lunch and that's why the market is so slow. Okay, so in about maybe let's say 2 hours time, you can probably see price creating a bullish engulfing candle. That's what I hope to see. All right, bullish engulfing candle, come back down, test the fair value gap, and then you can enter off it. And then where should you target? All right, oh, let's say we have a long position right here, right? Let's say long position, stop loss placed below this low. Okay, target the highest here. Okay, you can target the H1 highs, right, or you can target once price. This is one of the obstacles that you guys have to watch out for. Okay, so once price is here, shift your stop loss to break even and then target this high. On H4, this is a very nice level for you to target. Okay, 1:2.73. okay, this is something that you can watch out for. Okay, for those of you that might say, oh, the stop loss is 65 pips, right, you can also put it around here, right, but this is not a really safe level. I would rather just put it slightly below here, okay, and let price ride all the way to the top. Okay, we need a successful, yeah, we need a clear break around this level right here, then we can target these highs. Okay, so just follow this set of rules and you'll probably be able to adjust it on your own. I know that you guys have your own experience with the markets. You guys are able to add in your own confluences, like, you know, one of our attendees from right here entered off the break and retest. Maybe that's one of your criterias, right? Engulfing candle, break and retest, something like that, right? Adjust it based on what you have been doing, and then you will of course see results in the long run. All right, there's no winning strategy out there, right? It's more of consistency and practicing along the way. All right, then if you guys either you can try out TradingView Premium, right, or better option would be also this thing called FX Replay, right? Those are some resources. Okay, back testing tools. We have FX Replay, then we have TradingView Pro. Then for trading journals, you can just create your own maybe you can, one tool that I like to use is just a very simple note-taking trading journal, right? You can use journal. You can use Notion, right? You can use Notion, like trading journal. With Notion, okay, then you have your, what do you call that? Trade. I think it's called TradeZilla. I think it's called TradeZilla, right? Is it called TradeZilla? TradeZilla. Yes, TradeZilla. TradeZilla is really effective, right? You can connect your trading account to TradeZilla and then see on which days you do well, which days you don't do well. Okay, then what do you like to trade? Oh, GJ. I love GJ. GJ is my favorite pair. Oh, recently there is one pair that that kind of respects the strategy pretty well. Is it US cat? No worries. Is it US cat? I think it's US cat. Might be US cat though. Wait, let me see. Yeah. Oh yes, it's US cat. When price was around this area, you see, right? Once I saw this, right? I saw the bit of structure, and then I saw a very nice H4 FEG right within this level. So I didn't even have to mark out my levels. I can just enter. I took this low to this high, put all fibs. Wait, I think it's this low over here. Then I just entered. I just entered on the. I like to use 71%, so I just entered on the 71%. I think this is one of my favorite pairs now. It's decent, so I just targeted here. 1:2.4. I didn't target this high. I targeted this high. Okay. Then another one that I'm looking at is actually I'm just looking at to trade this pair, right? Right here. Sorry. Then we have H4 right here. So I'm aiming for price to come to this level. Then I just take a shot. Then target this level. This is something that I'm looking at as well. 54 pips, target 129. That's okay. Probably finish in 1.5 days. US tech. US tech is fun, right? US tech missed my level, so not gonna enter there. Didn't close here. Break. The quick fix, you can just do it yourself. You might want to take a picture. It's quite troublesome actually, but this is just I'm sadly I cannot share. TradingView don't allow me to share the fib settings, right? But let me just show you how it looks like. All right. So yeah, you just have to assign for every value. You might want to take a screenshot of this, right? It's pretty useful. It's very convenient, right? It's very convenient for you to use these fib settings, right? Okay, then usually you save drawing template as the name. Okay, then this is the settings, right? The settings, these are the ones that you need to take note, okay, to make it look aesthetically pleasing. Okay, background all just off. Okay, prices, yes. Labels, percents. Okay, labels, left, middle, text, center, middle. Okay, font size 12. Just take a, yeah. Then you scroll up. These are the trend lines. Choose the one that is dotted. Okay, levels line, straight, and then dotted. Okay, usually I put it extend to the right. So you know, it will extend to the right side over here, because the standard ones is very ugly, right? They have backgrounds as in like a rainbow color or something like that, right? Which is absolutely not nice. Okay, so yeah. Oh, there is a trade in now. Yeah. Don't really look that good, but we'll see. I was thinking just now when price was here, I was thinking should I hold or should I not hold? But we shall see. Yeah, US tech is fun. US cat is also okay, but pretty slow. GJ. Oh, almost forgot about my crypto. Yeah. Oh, crypto. This level 99512, around there, 9 or 98, right, is a very good level for you to buy. Okay, just saying, right? If you draw your horizontal levels, you can definitely see that this is a very nice level for buys. Okay, this is definitely your support level, right? Then we have another support level right here. Okay, this is our support 2. Okay, then this is your, yeah, this is a very nice level for buys. Okay, resistance level, and then we have, I think this level is fine. Second resistance, yeah. These are the key levels that you need to take note for BTC USD. Okay, then we are, okay, let's draw a fib, right? Let's draw a fib. Okay, all fibs 61. Oh my goodness. Yeah, and did I mention that BTC likes to respect 61 and 78.6% levels? Been holding it from 20k. Oh my goodness, man, you are rich. That's mad stuff. Okay, 61.8. Okay, so yeah, if you enter here, okay, just a tip, if you enter here, okay, around this level, stop loss placed below this low. Okay, TP right here. Okay, then you are projecting for it to go up. Okay, this is the level that I'm looking at for BTC. It actually looks pretty strong, not gonna lie, right? It looks strong. Okay, this is very simple stuff. Then you can look, yeah, maybe you can wait for 15 minutes, same structure, right? 15 minutes. Oh, BTC possible, right? If you want, price has broken out of this structure. Okay, what you could look at is for a short position around here, stop loss above this high, target this level. Okay, this is a scalp. Okay, but yeah, I might actually take this, right? Let's see the 15-minute candle close. Looks nice, looks nice. Yeah, but New York is where we might see volume. Okay, so yeah, short to buy, simple stuff. Okay, okay, yeah. So actually that's the end of, yeah. Okay, yeah. So that's the end of the webinar for today. Okay, thank you guys for joining me. Yeah, that was good, right? So you can sell to buy. Yeah, so that's just one of the ideas I had for BTC USD. Okay, so thank you guys for joining me for today, right? I appreciate the, oh, it's becoming a bit dark. Okay, thank you guys for joining me for today, right? I appreciate the engagement, and thanks for tuning in to today's session on preparing for 2025, right? So let's all stay safe, trade safe, and have a good year ahead. All right, see you guys in the next few webinars for IC markets. Okay, thank you, bye bye. Thank you for chatting and engaging together. All right, thank you.